Elon Musk just posted numbers that made the financial world pause. A $1 trillion pay package. Yes, you heard that right. Trillion with a T. But while Wall Street debates whether that's genius compensation or absurd excess, the Federal Reserve is quietly tightening its grip on the economy, with Jerome Powell warning of inflation risks and signaling interest rate hikes. On one side, a billionaire whose wealth is exploding faster than most economies can grow. On the other, a central bank trying to slow the very same growth. So who's right? Musk's audacious wealth creation, or Powell's cautious control? Let's start with Musk. His pay isn't just a salary. It's a stock-based package tied to performance milestones. Tesla's market cap, SpaceX valuation, even overall revenue growth. Each target achieved unlocks billions in stock options. Critics call it ridiculous or out of touch, but supporters argue it aligns the CEO with shareholders like no fixed salary ever could. The question is, can one man's wealth really reflect the health of the markets? Or is it a distorted signal in an economy where most people are struggling just to keep up with inflation? And speaking of inflation, Powell and the Fed have been fighting a war many investors barely see. Interest rates have been climbing steadily to cool off a labor market that's red hot, and prices that refuse to come down. Every rate hike is a nudge, sometimes a shove, towards slowing growth, reducing risk-taking, and ensuring the financial system doesn't overheat. The problem is, these moves can also trigger fear. Tech stocks wobble, housing slows, and suddenly everyone who's been chasing growth starts questioning whether the party is over. Now imagine the clash. Musk's wealth is multiplying as the Fed warns of restraint. Tesla stock rockets while bond yields rise. The headlines scream, Elon Musk richer than entire economy's GDP growth, and yet the central bank is signaling, hold on, the economy might be overheating. Investors are caught in a tug-of-war between FOMO and fear. Do you chase the rocket of Musk's gains, or do you heed the Fed's caution? Historically, ignoring the Fed can end badly. Just look at the 2000 tech crash or the 2008 financial meltdown. But chasing the Musk story? It's tempting, thrilling, and it can feel like missing the boat on the century's defining growth story. Here's the twist. The reality isn't just about Musk or Powell, it's about the signals they send. Musk represents the apex of wealth concentration and market optimism. The Fed embodies systemic caution and economic discipline. Together, they're creating one of the most tense market environments in years. Investors who lean too far in either direction risk disaster. Too bullish on Musk, and you ignore interest rate shocks. Too bearish on Powell, and you miss out on an unprecedented wealth creation machine that is literally rewriting the rules of CEO compensation. And yet, we haven't even scratched the surface. Musk's pay plan is so enormous that it raises broader questions. What does it mean for income inequality, for market psychology, for the very structure of capitalism? If billionaires can amass $1 trillion payday while millions face rising costs of living, does that change how we value stocks, or how governments intervene? Meanwhile, the Fed is walking a tightrope, trying to prevent the economy from overheating without triggering a recession. Every speech Powell gives is dissected, analyzed, and priced into markets immediately. One wrong word can send trillions of dollars of equity into freefall. Investors are left with a stark choice. Follow the narrative of unchecked growth and hope Musk's trajectory continues, or respect the Fed's warnings and brace for volatility. But here's the thing. History suggests the real gains, and the real losses, will happen in the moments no one sees coming. The subtle rate shift, the unexpected earnings report, the sudden pivot in sentiment. That's where fortunes are made and destroyed, quietly but ruthlessly. So, who's right? Musk, the symbol of boundless ambition, or Powell, the guardian of economic stability? The truth is, both are shaping the market in profound ways. And if you think today's headlines are extreme, just wait. The next earnings season, the next Fed announcement, the next market shock, they could redraw the landscape entirely. One thing is certain. Whether you chase the $1 trillion dream or hedge against the Fed's pressure, your decisions will matter more in the next 12 months than they have in decades. And by the time the dust settles, Only those who understood the tension between limitless ambition and disciplined caution will really see the payoff, or the loss. The question isn't just who's right, it's who survives. And right now, survival depends on reading between the lines of Musk's meteoric rise and Powell's steady hand, before the market writes the next brutal chapter.